All right, let's talk a little bit here about what happened over the last few weeks here. The run-up in the stock price, that led you to say what?
Sure, yes. Firstly, thanks for having me on here. So the stock ran up a fair amount on the back of the debt deal that was agreed to by the Congress and the President. On that, included in the debt deal was the confirmation that the student loan moratorium would expire. When that happened, that's a positive for SoFi. So that improved the fundamentals because a large part of their business is student loan refi. So the stock ran up. It was up 100% in the past month. It approached our price target, and we thought it was approaching the fair value, and the risk reward was a little bit more neutral at that level, and hence we downgraded to neutral.
So let's talk about the longer term prospects here, because even prior to this whole student loan business, the moratorium, and then whether it would be lifted or not, there were some concerns here about the company's business and whether it was going to be sustainable for the longer term here. When you look at sort of the balance and what they have on their books, what they're extending, and the current interest environment that we're in, what's the balance?
Sure. So, when you look at their books, what they've done a really good job over the last few years is diversifying their business away from student loans. So they started off as a student loan lender for the first, almost 8-9 years of their existence, and then they diversified away. They added personal loans, they added checking accounts, they got a bank license, added checking accounts, added savings accounts. They've really driven a lot of innovation on their platform and through their business, and as a result, they've managed to grow the company. And the company was earning is on track to be profitable by the fourth quarter of this year, which is kudos to them. That's faster than most people expected. So management team has been executing very well there.
With regards to economic conditions and the expectation amongst a lot of folks, at least economists, who think we're headed for a recession or economic downturn, how does that affect the books like for a company like SoFi?
Sure. So SoFi is at its core a consumer lender and a bank. If we were to go to a recession, we would expect delinquencies, et cetera, to increase. The credit conditions would get a little bit weaker, the credit metrics. What is important, I think, to keep in mind, though, is SoFi really lends to the high-income consumer. The consumer, typical student loan is, over $70,000. It's people who have graduate degrees, who are typically, you tend to see employment metrics a little bit better in that category. That category also tends to have a little bit better credit performance just from income. They built up a bigger cushion on their savings accounts. So I would expect them to be a little less impacted than the typical consumer lender, which is maybe a little bit more subprime or prime focused.
Given the broadening out of this business, the diversification, if you will, who is their primary competitor now?
So you have to go business by business. So when you think about their student loan business, it's going to be the other private student loan companies, issuers and refi. When you go on the personal loan side, it'll again be more of the personal loan companies. And then on the checking accounts and the bank side, they're really getting a lot of bank accounts. They're getting from the what they've said is from the larger banks.
Well, one reason why I asked that is there's been a lot of speculation, as I'm sure you know, about whether this would continue to be a standalone company, whether someone else, I should say, would be interested in actually buying it. Is that just pure, just random speculation?
Yeah, I think at this time, that would be speculation. I mean, they certainly have built a very interesting collection of assets. Everything we've seen, they're continuing to focus on growing. I think it would be a little bit speculative to speculate on M&A at this time. At the end of the day, it's a bank. I think if there's someone interested, it is interesting because it's an online bank. It's not like they have branches and it's a natural fit for geography.
It's a fintech. Come on, you have to get fair enough. All right, Mahir, great to have you here.
Thank you.